Welcome to Wealth, Words, and Wisdom, where real-life conversations lead to financial clarity. I'm Ashley Carter, alongside my co-host, Carrie Boatner. In this conversation-driven podcast, we talk about real-life topics like parenting, marriage, business, faith, and leadership, all things that naturally lead into deeper discussions about financial understanding, long-term planning, and wise stewardship. Get ready for some honest discussions about money, responsibility, and the choices that shape our future. Let's get into today's conversation. Welcome back to Wealth, Words, and Wisdom. And if you listened to episode 1, you know that most people think that they don't have enough money. But what we're going to talk about today is going to clarify that it doesn't really matter how much money you have, but what you do with that money and the system that you have in place for your money. Right, Carrie?
That's right. People are working hard, saving where they can, using an envelope style, whatever it is they're doing, but somehow still feeling stuck. They thought they were doing the right thing. Maybe they're even doing the thing that their parents taught them. Sadly, a lot of parents didn't teach people things about money like mine. I don't know about you, Ashley, but I didn't learn any system. And sometimes people are just giving their money away to a wealth management company, thinking that they're also doing the right thing for them. And oftentimes you find that that's not the case either.
We're going to talk about infinite banking, and this is a way to take back control of your money. And we're going to give an example that's going to show you how you can continue using money over and over again and recycling your money.
It's not money laundering though, is it, Ashley?
It's completely safe, totally legal, but very exciting. So, Carrie, let's dive into this. So when someone wants to make a large purchase, let's say a car, a home, or like a client I recently talked to that's wanting to buy a camper for their family, typically someone is going to either pay cash for that, so they have money saved up in a savings account or just cash stuck away under the mattress or whatever, but they either typically pay cash or they go borrow money from a bank. So let's talk about how you lose no matter which choice you make.
Yeah. So interestingly enough, when people are borrowing money, number one, they're spending thousands and hundreds of thousands of dollars, really, if you look at a lifetime, right? People look at buying a house and the money and the interest that they are paying on that, or even cars. I mean, how many cars do people buy in their lifetime? And then, like you mentioned, maybe buying a camper or going on large family vacations. These are some charges that people make, or they borrow money for those things, even though they are planned items. Even if we plan in that regard, it's still very poor planning. They may fit it into their budget, but what they're not fitting into the budget is actually the money they are losing when they make those purchases. And there really is a better way with infinite banking.
That's right. So if somebody goes and they just pay cash outright for a large purchase, then that money is gone. Like, yes, they have the item that they purchased to show for the money they spent.
Right.
But the opportunity cost of that is very high, because then they have no more opportunity to make more money on that money. The money's gone, right?
Yeah. The thing that's interesting about that, Ashley, is I say that to people, and you've probably had the very same conversations. We say that to people, like, you give that hand that money over and it's gone for good. And people are like, yeah, of course it is. Because that's all we've ever been known to do. However, the Rockefellers, that's not what they do. And that's why they have generational wealth in their family. But really, there is such a better way. And like you mentioned in our first podcast, Ashley, you mentioned the ice cream example. When you learn and you know what you know now, number one, we wish we could go back. I wish I could go back 40 years and start over. And I'm sure you wish that you could, not 40 because you were born then, but you wish that you could go back and start over. The good thing is we have the
Mhm.
opportunity to start over, like with our children. And we have the opportunity to now to share that with people so that they know that there's a better way. I like to say we're going to help people begin with the end in mind, thinking about what they want to see in their
Mm,
future. We can help them with teaching them very simple steps. It's easier than you thought, right? Much
that's
easier,
right.
but teaching them what they need to do so that they can capitalize on that money, like leverage their money, use their money, but actually keep earning money on their money at the exact same time. It really plays a little trick on your thinking when you really look at it because it goes so against what
Yeah.
we've been taught.
Right, because we're taught to make that money, save up for a big purchase. Then you have that money in hand and you can go spend that money. And then you've worked hard. And so it's paid
Mhm.
off and you're supposed to feel so good about it. But let's talk about how infinite banking completely changes that. And now, instead of the money being gone, the money is still in your account,
Mhm.
growing compound uninterrupted interest,
Yes.
and you still have your item that you purchased over here that you get to enjoy
Yes.
while the money's still growing. And for most people, it's like, what does that even mean? That doesn't make sense.
No, and I've got a really good example, Ashley. Actually, the young man that you and I have been helping who wants to purchase a house. Number one, congrats to him, 28 years old, wanting to buy his first house, which I think is a tremendous accomplishment. And he's been working and saving and working and saving. And so, in the process of him wanting to buy this house, most people know that you have to put a percentage of money down on that house to show that you've got some skin in the game, whether it's to avoid PMI insurance or whatever. He had that lump sum of money that he wanted to put down on that house. And so the good news is I was able to have a conversation with him and we were able to show him through our illustrations how he could, instead of just writing a check and saying bye-bye to his money forever, able to set him up with his own personal bank. That's how I like to call it. Set him up in his own personal bank so that his money now, that 20,000, let's say, sitting in an account, growing compound interest, not just growing with compound interest, but also earning dividends. And side note, the company we set him up with has paid dividends for the last 100 years, even during the Great Depression. So his money now is sitting in an account in his own bank, growing compound interest, earning dividends, ready for when the right house comes along. He's just going to be able to borrow against that money. His money is going to stay sitting there. It's going to serve as collateral. He's going to borrow money and he's going to be able to secure that home, like you said, enjoy his first home and then pay that money back whenever he wants on whatever terms he wants. Because guess what? It's his bank. And he could
Mhm.
maybe even, crazy thought, not pay it back. There's a
Mm.
thought.
Wow, what does that even look like? And I want to touch on real quick the fact that you said this company that you're using
Mhm.
has been paying dividends for over 100 years, even through the
Yes.
Great Depression. And it's very important that people connect themselves with or partner with companies that are extremely stable, reliable, and trustworthy, right? I love that we're able to offer people that security. And I would love for us to really break down. So we've talked about the words infinite banking and having your own bank.
Mhm.
And I know we kind of touched on this. You don't have to be rich to get this started, right? So most people are thinking, have my own bank. Like I'm not a millionaire, billionaire,
Mhm.
whatever it takes to start a bank.
Yeah.
Like I'm not that. So how do I get this started? So I would love for us to really break down what is infinite banking and let's elaborate on the fact that infinite banking is this concept. It's actually a properly structured cash value life policy.
And what I love about the fact that it has got that life policy component to it, Like, that's a tremendous benefit. And some people can even look at it as mortgage insurance in a way, right? To
Right.
secure that the
Mhm.
funds are going to be there to cover like a purchase of a home. I love the fact that you include in there that it is a life policy, Ashley, because that is just one of the great benefits of it. We're not actually using this particular type of system for the life insurance. However, that's a benefit. We're actually properly designing this and structuring it so that it is being used as a bank. Another thing that I really love that you just touched on was that you don't have to be wealthy to do it. It is what the wealthy people use. As a matter of fact, it's the number one asset that banking and financial institutions own. I spoke with a single mom, and quite sincerely, she's somebody who could use the life insurance component of that for her children. But the amount of money she could use to start her bank was $500. That was her comfort level. And the amount of
Right.
money that she felt comfortable depositing into her bank was $100 a month. And the beautiful thing is there's no other fees on top of it. It's not like, okay, here's your $500 to start your bank. Here's your $100 deposit. And oh, by the way, you need to stroke a check to XYZ company for getting your bank set up. So the nice thing is there's no additional hidden fees that anybody needs to be worried about. And it truly is for everyone who wants to leverage their money, have security for the future, and be able to bank like the wealthy people do.
I know oftentimes when we think about life insurance, most people are most familiar with term life insurance,
Mhm.
where you pay in this premium monthly or yearly, and for a short amount of time, 10, 20, 30 years, you have insurance to cover your death if you die within that time frame.
Mhm.
If you do not die within that time frame, all that money is just gone. At the end of that term, 10, 20, 30 years, whatever the term is, your payments stop and the coverage ends and the money's gone. I don't think term insurance is always a bad thing. I think that it could really help protect a family in the instance of a tragedy. But with that being said, we can use an infinite banking policy for the same thing, but the term never ends. And it's something we can pass down to our children. So we're able to start this policy. The money is going to grow every single year. It's going to be protected from market loss. We can access the money anytime we want.
That's right.
So in a term policy, you don't have access to the money you're putting in.
That's it.
You're just putting some money in to be covered in case of a tragedy.
Like car
But
insurance.
with, yes, exactly.
Mhm.
So with this policy, we can access the money. It's our money and it's going to continue compounding even while we use it. I want to talk about that a little bit more because I do feel like as I've talked to people, that's one of the hardest things for people to grasp and understand. I want to talk about how when we're using money out of our policy, what we're actually doing is we're not going, like, for instance, if you have money in a traditional savings account and you need your money, you go to your account and you take money out.
Mhm.
So if you had 10,000 in there and you need 5, you take 5 out, your balance is now $5,000 because you took 5 out of the 10. With this cash value policy, we're not taking money out of our account and reducing the balance. We're actually borrowing against the money that we have in our account. So I would like for us to talk about that a little bit more because, like I said, I think that's so hard for people to grasp because it's something so totally different than what we're traditionally taught.
Mhm. Yeah, the other thing too, Ashley, as you mentioned, just putting money in a savings account, the average interest rate that money is earning in a savings account right now is 0.39%. That's
Whoa, whoa,
0.39.
whoa. Carrie, that's
Yeah.
less than half of a percent.
That's right. That's right. That's what it's earning in a regular savings account. So, what if you were someone who just wanted to save? What if you just wanted to save just so that your money could accrue? Would it be smarter to put it
Or
in a savings account in a bank where we all know the banks have collapsed before? Or
Mm,
would we rather put it in a properly structured cash value policy where it is earning anywhere from 3 to 6%? Would
mm.
we rather do that? And then when we want to borrow the money, we just always can. Of course, that money still stays there, but we can have access to whatever the amount that we have available to us in that policy. And it's available, within 48 hours after the policy is initiated. And you don't also, actually, when we talk about cars and houses, usually if people want to borrow money for that, they have to fill out a long application. They have to get pre-approved. They have to provide their tax returns. And we have to wait for someone else to tell us whether or not we're allowed to purchase that item. The nice thing with this is you just pick up the phone and that money will be in your account within 24 hours because it's your money.
They don't care what you spend it on. You don't have
No,
to be pre-approved. There's
no,
no possibility of getting denied for this loan because it's your
mhm,
money.
that's right.
And it's amazing to me that you don't ever have to pay it back. Obviously, we're financial professionals and we understand that to make the most of your money and to do right with it, you're going to be paying your loans back. You're going to pay yourself back.
Right,
But what's interesting, as you've mentioned, is if something happens and you can't pay that back, it doesn't matter.
right.
Because, like we've talked about, there is a death benefit attached to this policy.
Mhm.
And if you're never able to pay that loan back, then that amount just comes off of the death benefit amount at the end of your life and it covers that loan. So let's talk about, for instance, this family that is wanting to go purchase a camper. They're wanting
Mhm.
to make some memories. They've got young kids. They're so excited. So I have this conversation and I'm like, hey, that's amazing that you have that money saved up to go buy this camper. Like, that's great. But let's talk about the two scenarios of what you could do. You could either go spend your money, that cash, and buy that camper. You'll have the camper, you'll be able to go enjoy life, make memories, have so much fun, but that money's
Mhm.
gone.
Right.
Or, and I actually sent a text to this person and I said, hey, do not buy a camper without
That's
starting
right.
your own bank first.
Yes.
So
Mhm.
here's what you could do alternatively. Instead of spending the money and it being gone and you only having the camper to show for it, you could put this money into your own bank. Start your own cash value life policy. And you're going to have access to that money. So, yes, you're still going to be able to go buy your camper. But in addition, you're also going to still have that money, that total amount. Say we're putting 20,000 in, you're
Mhm.
still going to have that 20,000 in your account growing with uninterrupted compound interest.
That's right.
In addition, you're also going to have a death benefit attached to that.
Mhm.
So, God forbid something happens to this person, their family is going to be able to have some money to do whatever. And I'm like, would you rather just have the camper sitting over here, or would you also rather have the camper and these
Yeah.
other benefits where you
Yeah.
can come back and continue using this money over and over again? Or do you just want to spend the money on the camper and have the camper to show for it?
Right. Another component too, Ashley, I mean, I love that visual. Would you rather have these two things, or just this one? I love that. The other thing too that I find to be very attractive is that when you have your money in a savings account, and your money earns that whopping 0.39% interest, they're going to send you a 1099. You're going to know at the end of the
Mhm,
year how much interest, or I guess I should say how little interest
mhm,
your money earned, and you get the benefit of actually paying taxes on the money that your money earned. But with this scenario, the interest that your money is earning and the dividends that your money is earning is also tax free growth
mm,
on your money.
yes.
I love that. Another component, and this is not me going too far down the rabbit hole, but Oftentimes people, when they think of a life policy, they can sometimes feel like, well, the big benefit is in the event of death. I love the fact that there are some components to these policies that allow that in the event that the policy owner becomes ill in the course of owning that policy, that you actually have access to that large death benefit while you're still
Mhm.
alive, and you can use it for medical care, whether it's terminal care or just a chronic illness. The nice thing is you also have access to that. And that's nothing you're ever going to get from a savings account. Bank of America
That's
isn't
right.
going to give that to you. So I really love that too. So we're really trying to protect people, not just their money, but
Mhm.
we're trying to give them some security, some peace of mind that their money has multiple uses. And that's really what the word
Right.
leverage means. It's not just a single use for your money, just to spend it and say bye bye, trading that money for an item. We're actually investing in your own life, investing in your own family, growing your wealth, but then also making sure that there's something there to take care of your family in the event of a death, but also to take care of you in the event that you experience either a terminal illness or chronic illness during the time you have the policy. So I love that too.
Yeah. I love that you brought that up. And you know me, Carrie, I'm all about visuals and examples. And so as you're talking, I'm sitting here thinking about my personal family. I stay home with our kids, and my husband goes out and works every day. He works hard for us. Praise the Lord. He's such a good man. Thank you, Lord, for
Yes.
blessing me with him. But I'm sitting here thinking about our family. If something were to happen to him and I'm staying home with our children, what am I going to do? You don't want to have to worry on top of losing this person. You don't want to have to worry also about finances in that terribly tragic time.
So, Ashley, here's the part that hits even deeper. Most families are only one emergency away from a financial crisis. That could be one medical bill, one job loss, one unexpected expense like, car repairs. But here's what this infinite banking, your own personal bank, can give you. Number one is going to give you peace of mind, knowing, like we're talking about, that there is some security, a net there to catch you. It's going to give you liquidity. It gives you access to getting to your money whenever you want while it continues to sit there and grow. And then it also gives you that complete control of your money. You're not waiting for someone to tell you whether or not you can buy something or purchase something. You've got that complete control of your finances. So it really creates a financial foundation that doesn't depend on what the market's doing. It
Mhm.
doesn't depend on what the politicians are saying, who's in office. And it also isn't going to be dependent on interest rates. And then over time, it becomes something even bigger than what you intended it to be. And that's a legacy. That's a legacy that we
Mhm.
create for our families and for the future, like the Rockefellers did. Because when we
Right.
structure a properly designed system, it allows you to pass your wealth on to the next generation. And that money, again, like I mentioned earlier, it's going to be tax free growth. And it's while you are teaching your kids and your friends and your family how money actually works. I know for Ashley and I, our goal and our desire, our heartfelt desire, is to stop raising children who just borrow money. We
Mm.
want to start raising owners of their own bank, owners of their own destiny,
That's
forward
right.
thinkers, thinking outside the box and being able to be in control of their finances. Because we know that the borrower, according to the Bible, the borrower is
Mm.
always going to be the servant to the lender. And
That's
we
right.
do not want to set our children up to be in that situation. I did not want to be in that situation any longer. And I know I speak for Ashley, same thing.
Right. And I love that you said that about the legacy part of this. I think that as parents, we can all agree. Like you think, I want life to be even better for my kids than it was for
Mhm.
me.
Yes.
And it doesn't matter how good your life was. You want to give your kids the best life that they can have. And reality is that finances is part of that. I'm not saying that you have to pass down money for them to have joy. We know that joy ultimately comes from the Lord, but it's real life that having a strong financial foundation is going to give you better choices and options in life. When I first learned about infinite banking, I loved that generational wealth concept. I also love, Carrie, this different way of thinking about our money. It's about actually controlling your money, having certainty with your money. One of my favorite parts of this, I mean, I could go on and on about why I love infinite banking. I keep saying, like, oh, I love the generational wealth part. I love that there is this death benefit tied to this money. I love all the things, but the uninterrupted compound growth is so, so powerful. As we've mentioned, if you go and you take money out of a traditional savings account, that money's gone and it's no longer able to grow and gain interest, even though it's less than 0.5%. Still, the opportunity for it to grow at all is gone in a
Yeah,
traditional savings account.
that's right.
But in an infinite banking policy, the average growth is 5 to 6%, and that's uninterrupted compound growth. So when you really grasp that this is uninterrupted growth and it's compounding on itself over time. So for people who don't understand that, what that really means is that when your money grows and gains some interest, you then have a larger amount because you added interest to it. Well, what compound interest means is that then the next time you earn interest, you're earning it on the larger amount. And then the next time you've added more interest. And
It's a
so the amount is
snowball.
even bigger.
Mhm.
Yes, and so you're
It's
earning bigger and bigger and bigger every time, and it's this snowball effect, and so your money is able to grow a lot more than if you just had it in a traditional savings account.
yeah. You know that saying, Ashley, "A fool and their money are soon parted," right? We've heard that before.
Yes.
Well, it's why the wealthy people do this, because they're not foolish about money. That's why they're wealthy. Well, it's part of it, but they're not foolish about what they do with their
Right.
money. So if you've ever felt like you're doing everything right, but nothing's changing, it's probably because no one ever told you that there was a better system. I know that's where Ashley and I were. And infinite banking is going to give you a better system. In future episodes, we're going to walk you through how this impacts your taxes, how it fits into your retirement planning, how it works alongside safe retirement accounts where you're not losing any money at all, and how families like you are using this to build generational wealth. We're very thankful that you joined us today on this episode, and we look forward to future episodes next Tuesday at 6 a.m. Central Time. Thank you for listening to Wealth, Words, and Wisdom. Our goal is simple. It's to help you approach your financial decisions with clarity, confidence, and with intention. Because we know that when wisdom leads the way, your money decisions will feel less overwhelming and they will be far more aligned with your real life. If something you heard today resonated with you and you'd like to explore your options, we offer complimentary strategy sessions. There's no pressure, there's no obligation. It's just education and clarity. You can reach out to us at wealthwordsandwisdompodcast at gmail.com. And be sure to subscribe to our YouTube channel. And if this episode was helpful, share it with friends or family who you believe could benefit from this conversation. Until next time, remember, wealth grows where wisdom leads.